I want to start saying that I'm not a financial advisor. I'm not giving financial advice. You buy your stocks, your funds, your ETFs at your own discretion. Do your own research. I'm just giving my opinion. Now, on this channel, we talk about dividend paying stocks. We invest in dividend stocks. We're trying to build a secondary income to come in. We'll work a full-time job, We'll start a side business. We'll start a YouTube channel. But what else can we do to make some more passive income? And dividend paying stock is one of those ways. Now, I bought a stock today. It's called EXD, Eaton Vance Tax Managed Buy Rights Strategy Fund. I bought one today. Now, the reason I bought this, because Seeking Alpha had a good article about it. That's the reason I bought it. Seeking Alpha had a good article about it. And, excuse me. And this is the stock price. Look at the 5-year trend here. If it loads up, there's been going down some. And we see this line, it was $12 4 years ago. And now it's suddenly going down and down and down. It's been going down for a while. Maybe it's starting to creep back up here. And that's where, I see it creeping up here. And then with the pandemic happened, it dropped down to $6 a share. And now it's starting to work its way back up. So it was going down for a while, for a very long time, and then was suddenly going back up. Okay, so that's one thing I look at when I'm buying a stock. I look at the 5-year trend. It was going down like a downward spiral. I wouldn't invest in it. If it goes down and starting to go back up, I might check it out. All right, so this is Seeking Alpha. It pays a monthly dividend, which is nice. They pay 7 cents a share. Declaration date is October 1st. So you must, I guess you have to buy it before the 1st to get paid the next month. So I probably won't get paid in November. I'll probably get paid in December, which is fine. The one thing I like about this stock or this ETF is the holdings in it. It has Apple, Microsoft, Amazon, Facebook, Google, both Googles, Adobe, Pepsi, and Netflix. So all those brands right there, I just mentioned, we all know who they are. We all know how they make money. So there's no point in me going into detail about all those funds, all those holdings. That's strong. Okay, that is strong. Now, one thing I do with these stocks and ETFs, I go to the official website to see how the website look. Is it cheaply made? Is it made really well? All that's important to me. This is the website here. And here's a symbol here, how much it cost. Here's the historic returns of the portfolio of the stock here. And here's the expense ratio, the manager's fee. So I'll go to portfolio. I want to see what's inside of this. And sure enough, all those companies are pretty good companies. And we hit view all. Okay, as of August 31st, these are the companies in this fund. Okay, let's scroll down. There's Visa, Home Depot, Comcast, Procter & Gamble, Johnson & Johnson, Qualcomm, CXX Corp, Intel, Verizon, MasterCard, Gilead Sciences, Walmart, Goldman Sachs, it has Waste Management, Merck, McDonald's. I mean, it has a lot of stuff in it. Lincoln, National Corp, Fidelity, Cisco. Even though it's 0.5%, it's still somebody's in there. Nike, Iron Mountain, JP Morgan and Chase. I mean, all these companies that you see on the screen, you don't have to know all of them, but if you know majority of the stocks inside of an ETF, you know how they make money, because everyone uses it. Everyone uses Netflix. Everyone buys Nike. Everyone, go to Walmart, Home Depot, use Visa. I mean, these things everyone uses. Keep on going down. You see General Motors, Kroger, Boeing Company. I mean, it has a lot of stuff in this fund. United Airlines, Target, Best Buy, Altria, Gap. I mean, these things we just know. Tractor Supply, Public Stores, Kellogg's. What else we got? Caterpillar, Tiffany and Company, Coca-Cola. Even though it's like 0.11%, it still has a teeny bit of it. Okay. Tyson Foods, Western Union, CVS. I mean, it's a lot of brands backing it up. I mean, you talk about the top 10, we all know. And then you got Home Depot. I mean, Home Depot, everyone goes to Home Depot. Everyone goes to Home Depot. Okay. You got Comcast, you got Procter and Gamble. I mean, these companies, we all know who they are. Johnson & Johnson. So I seen that. I'm like, that's powerful. That's powerful. That's some of the research as I go into a fund. I also want to see how long they've been in business. How long have they was founded in 2005. The dividend yield is low, but it's okay on a $9 stock. Yeah, so I bought one to do a video, how I look at stocks, if I want to buy one really quickly. And the best experience in stock buying is just buying a stock and holding it. Now, I'm not telling you to buy this one. I'm telling you to do your own research. But I go by what's in the ETF. What's in it? Can you identify 30 companies in it and know how they make money? All right. Do you think those companies going out of business in 10 years? I don't think Netflix going nowhere. I don't think Facebook going anywhere. Google's not going nowhere. Amazon ain't going nowhere in the next 10 years. All right. So that's why I look at and think to yourself. It's a thinking game. How they make money? Who are they? How they make money? How long they've been in business? And do you see that business going further 10, 20, 30 years from now? You understand what I'm saying? And then the price of the stock is now $0.20. I wish it did pay a little bit higher dividend, like maybe 10 cents. But it only pays 7 cents a share. And you notice they can diversify in a lot of companies. You see the pie chart here. The biggest portion is technology, where technology is huge. And you got communication, a little bit of healthcare, customer defense, utilities, financial. You have a little bit of energy, basic material, a little bit of real estate. So you have a little bit of everything in this chart. Okay. That it does pay only a 6-cent dividend, which is kind of low. I mean, it's not low because it's on a $9 stock. I've seen some ETFs that pay it's like $35, and they only pay like 7-8 cents. I'm like, that's a lot of you spend a good chunk of money to buy something that'll pay you 7 cents a month. But I guess I wish the only bad thing about it, I wish it was paying more than 7 cents. I do. Go to dividend history here. I wish it paid more than 7 cents. This thing was paying quarterly. 2017 was 29 cents a share quarterly, and then it broke off. But they lowered the dividend. They lowered their dividend too to 16 cents. So it took some hits. So since 2019 of March, it's been a year and some change. It's been paying 7 cents consistently, and I think it will stay there, in my opinion. But it only pays 7 cents, so it's kind of like, I mean, I got to hold a few of these myself. I probably buy a few. But it has some strong holdings in it. The holdings you can't deny are strong. Pepsi, I mean, these things are not going out of business. And I love the strong holdings in it. There's a strong holding. I mean, look at this stuff. This is strong. Pepsi, Visa, Home Depot, Comcast. I mean, Procter and Gamble, Johnson & Johnson. I mean, this screams like this is a great ETF, in my opinion, to get to. MasterCard, Walmart. I mean, Waste Management, Merck and Company, McDonald's. I mean, these things that everyone uses a day. So that's the end of my video. I hope you enjoyed the video. I use Robinhood for my stock buying and purchasing. If you want to join Robinhood, I have a link below the box as well. You can join that as well. And do your own research. This is a typical what I do on research. I believe that the holdings are strong, and and sometimes while I'm learning, the best experience is to hold a stock. I'm not encouraging you to buy a stock, but the best experience is you to hold the stock yourself. That's the best experience, because you can read all the financials you want, you read all the papers you want, all online, or all the videos you want. But until you actually buy that stock and hold it for a period of time and show your experience of it, You will never know. I bought a lot of ETFs in the past that had good holdings, but they couldn't dividend to like nothing. And there's no point of return. And they drop. And you can't predict that. You can't predict that. So my best experience for me is to diversify my portfolio. One, have different stock ETFs I invest in, hold it for a period of time and see how it does. That's the best experience you can do for yourself. So again, thanks for watching my video. Please subscribe to my YouTube channel. Please like and share the video. If you have any questions, comments, concerns, please listen below the box below. And I'll see you on the next video.